It's May from Markets with May. And today we're going to go through Adobe, which just reported earnings, and then a little bit of a change of pace. This is going to be a reaction video to Binance CEO's response to Kevin O'Leary, which I think is kind of important because clearly the news agencies are taking one side of this more so than the other side. If I do a typical Google search on YouTube or anything, I get like 30 videos of defense of Kevin O'Leary, and then I only get like a handful of videos where the CEO of Binance is allowed to speak. So I want to kind of do that. And by way of background of why it might be interesting, I have a pretty strong risk background. I was in Wall Street for 20 years on the sell side and then on the buy side. And then David, who's going to watch it with me, was a floor trader a gazillion, well, quite a long time ago, even before me, and has been trading his entire career. So this is going to be the opinion of someone buy side and someone sell side, et cetera, trading, et cetera. So hopefully this is helpful to you. So let's get into the day. I'm going to share my screen. We always say past performance is not indicative of future returns. And we always start by just setting up the context of the day. And today, we have a very red screen with all of the indices down. At one point, they were down even more. And then crude oil also down another 2.25%. If you look at the map, the heat map that I always love to look at from FINVIZ, you can see it's almost entirely red with Meta, Adobe, which just reported, and so on and so forth. Just a handful of names that are up. This is clearly just selling for the end of the year as much as anything else. I think with all the news flow that's going on, even if you had one-off names that you really like, piling into them wouldn't make sense. The market's just so red, and everybody, because of the different data points, is looking to next year to really start to feel confident that anything is going on. That said, a couple of little nuances that I also just want to set up for you. Here, economic data, even though it's the week before the holidays, it looks like we're going to go all the way up until the very end. Sorry, it's the wrong date. Okay, we're going to go all the way up until the very last day. And then because of it, we'll have Monday, we'll have a shortened week for the last weekend of New Year. But you can see that consumer confidence comes out on Wednesday. Probably will look like not very confident as the trend has been. And we have GDP coming out. And then we also have, oh, I got to cut off here on Friday. Oh yeah, we have PCE. So it is an extremely heavily laden week of economic data. And so here we are Friday, and it's been such a weird and awkward year. I think it makes sense why there's not a ton of buyers amassing in front of the new year. Now, let's talk about Adobe, which reported earnings yesterday and rallied aggressively. And I was like, oh, I wonder if it's going to take things up. I was really kind of excited for them because I really didn't think they'd do that well. And then I read the release and I was like, ugh, I hate it when like a stock rallies and I read the release and I'm like, why is it rallying? It doesn't make any sense to me. It just makes me feel bad because I really actually like Adobe a lot. The reason that I was surprised that it was rallying to begin with is because if you think about what Adobe does, a huge component of what it does is actually linked to the gaming sector, because all of the graphics in this Web3 world is going to come from what? Gaming, right? Or gaming technology reapplied to other parts of the economy for 3D visualization. It's really the additional artwork that then gets mapped on in different spots that Adobe intersects with this, along with some other technology. The second big end market that they have is really advertising. And you can't very well see the whole market red and think, oh my God, Adobe's going to crush it because everybody's going to massively increase their spend on advertising graphics. Okay. Like we know from the quarter before, or this quarter, all of the ad guys told you that experiential is the part of the business that's allowing them to succeed and grow and all that stuff. It's not the more classic areas of digital spend, digital advertising, that sort of thing. So it was a little bit awkward to me to see such a explosive response. I'm like, well, did the street take its numbers down or what's it, and that is always going to be the case. But when I look at what happened, okay, this is what I see. This was from the release. And when I look at it, I see top line growth of 10%. So this was something that you always have to watch out for at the end of the year. This is their fourth quarter. So they were talking in terms of full year growth, and the sound bites that are out all over the place are 17% top line growth, 17%. Okay. yes, that was the growth for the full year. But the growth on the quarter for revenue was 10%, which means that if this quarter did 10% and for the year they did 17%, then for this last quarter, which ended December 2nd and would encompass the Thanksgiving Black Friday period, they really were up 10%, which is a significant slowdown on revenue. Now, that ain't bad, to be fair, okay? But it isn't, I mean, it's multiples around the high teens or something like that. In contrast, people have been crushing other companies quite more aggressively. I'm talking about enterprise value EBITDA here. Operating income was flat, right? And then net income was actually down 4. And so I was like, wait a second, this thing is popping up 5-7% in the pre-market, but on a down 4? I don't understand. How low was the street exactly and what's going on here? I don't know. Cash flow from operations. So if we look at the components of operating income, R&D was an uptick of 17%, but just for context, some of that's kind of like the uptick I would have anticipated. I mean, like for those that were truly kitchen sinking and digging in, this number was like way higher. So this 17% kind of reminds me of if you were trying to increase your R&D on the quarter, in line with what your expectation on revenue is, but maybe it came in a little lower than you were hoping. That's that kind of R&D expense increase. Alternatively, I'm not really upset with that because they do actually have a pretty strong balance sheet. So this isn't a case of, oh my gosh, Adobe, how will it make it through? This is more, if everything is going down, so should Adobe, so to speak. Sales, they brought that in a bit. G&A, they didn't have any way to bring it. They didn't really, this tells you there is a place at which you need economy of scale for this to actually make operating income and bring it down to net income. Now, if we look at the cash flow from operations line, you see like a $300 million increase in operating cash flow, but you see a huge increase in stock-based compensation. So, stock-based compensation is a form of dilution, my friends, FYI. So I'm looking at this and I'm like, I don't love it. I really don't love it. I do think that what they're doing, there's a tremendous amount of really interesting, innovative things on the other side of this, but they need the economy, just like Google needs the economy to pick up. Are they leaders in their space? Yes. And in a lot of ways, I would say they're more like a Google, Microsoft, and kind of thing. Apple's a little bit of a different animal than they are like a Meta who needs to actually transition its whole business model and also have a little bit of upside from the economy to really not be on everybody's bad list for a while. And it will also have to start paring down costs like crazy. Adobe is more like Google and Microsoft, where they'll potentially maybe be some layoffs, but not really even. I mean, there were definitely some layoffs at Google. Please, anyone that's being laid off at Google, I apologize if that was taken the wrong way. But it's not going to be this like, oh my gosh, if we don't start cutting costs, we have a really big problem because we're not going to be able to come out the other side of the tunnel. So that is true with Adobe, but it doesn't like that rally didn't make any sense. It really should just stay more or less put. And so, it's still about 3% above where it was trading yesterday. I wouldn't necessarily pile into this unless we get a real aggressive rally where people just lose their mind or like, I'm just gonna pile today. You really need another quarter from Adobe, or alternatively, you need everyone to come out the first quarter showing that they did a great job for the Christmas holiday and are totally stoked to be spending on the main drivers of their business in the first, second, and third quarter. All right, so that's Adobe. And now let's go. What we're going to do that's a little bit different is I wanted to show this interview because I found it fascinating. And I was going to, and Dave and I were talking about it. I was like, well, let's just watch it together. And then I was like, well, let's record it. So here we go. I'm going to share my screen. Let me get this set up. All right. This is, we're going to do kind of a pause reaction video to this from this piece from CNBC, because there's always so much jargon in this that I actually think it's really unfair. I give a lot of credit to the folks at CNBC in the sense that they're very like they always put more senior reporters like Andrew Ross Sorkin and others on this on these type of interviews because these guys will need to think on their feet. But at the same time, even so, there's a lot of jargon. So let's kind of go piece by piece on this. Hopefully that won't annoy you to tears, David. We'll see how it goes. First time doing it. All right, let me full screen. Get this all the way back. All right.
So many issues about trust and credibility and integrity in this space. And I want to talk about FTX in a moment, but I want to start with what's happening at your own firm, given the outflows this week. I saw that you said on an AMA, this is one of these Ask Me Anything, you said there's no amount of withdrawals that would put us under any pressure. But that, I think, is a very bold statement to be making. How are people and why should people trust that their money is safe at this point?
So I think
I'm going to say one thing. So if you didn't watch our Coinbase episode, a lot of what he says is also relevant to Coinbase. And I go through the financials where you can see financially what matches the things he's about to say, because Coinbase runs approximately the same way that CZ is about to explain that he runs. Additionally, yeah, let's just, the other thing I just wanted you to note, and I show the numbers in the other episode, the reason we care about Binance is not just because of the interaction with FTX, but Binance is the global largest exchange. It does about 10 times, does about 5 times the volume, I think, of Coinbase. And then Coinbase does 5 times the volume of what I think FTX would have been had it not blown up. There's about 4 others that do about the same amount of volume. And I assume that FTX would have been swooped in with those other kind of upper mid, but top 10 exchanges. So Binance is significantly larger than any other global exchange. In a lot of ways, I do think it's a little crazy that everybody's attacking Binance right this minute, unless they're trying to just attack all of crypto, which is a possibility. But you really don't want an exchange that is so much larger than FTX to also blow up. But let's have a look and see what he has to say.
I think thanks, Andrew, for having me. And the well-run crypto exchanges should hold user assets one-to-one. So user deposit Bitcoin, we hold it in Bitcoin, we move to a cold wallet, we keep some in the hot wallet. And people, they sell it. Now the Bitcoin belongs to somebody else, but we still hold it in the cold storage. People can withdraw 100% of the assets they have on Binance. We will not have an issue in any given day. So 100% of the users withdraw 100% of the assets, we'll be fine. This is very different for traditional financial people to understand, because banks run on fractional reserves. And the traditional regulators, many of them may think that it's okay for crypto businesses to be running on fractional reserves. That is not okay. In crypto, there's no central bank printing money to bail out banks when there's a liquidity crunch. So crypto businesses have to hold user assets one-to-one. And that's
okay. I'm going to just define a couple of terms there for folks that haven't been watching crypto at all. First, cold storage versus hot storage. Cold storage means you're taking it completely off the blockchain. It is not available for someone to hack. Coinbase does this as well. They have a video on their website that talks to this. And then hot wallet or hot storage is going to be something that can be accessed by users in case you need to do some sort of draw. Now, the other thing is he's talking about each account, you hold the assets one for one, whether it's hot, meaning online, or cold, somewhere where someone couldn't get it online, like a vault. So it's got to be held one for one. That wasn't what FTX is doing. And if that's not clear, please do go to the Andrew Ross Sorkin video that we did. He was very clearly saying that those assets were used, as collateral against a bunch of stuff. But I'll go right there. David, did you have anything that you wanted to talk to on this point, or you want to let it keep going? David, are you there? All right, David, you're on mute, I think. Just stop me if I'm talking over you. I'll keep going.
No, I'm good. Yeah,
okay,
I'm glad you explained the cold versus hot.
Good, cool. All right, let's keep going. So then he's talking about fractional reserve, and let's hear what he has to say. And that's a big fat no-no, and that is very different from a traditional banking system. That's totally true. In a traditional banking system, if you're going through any,
it's very simple.
Okay, but let me ask you about that specifically, and I don't want to get too technical, but indulge me for a moment. When you had what seemed to be liquidity issues around customers wanting USDC, it looked, at least from this vantage point, that what was happening here could have been avoided if, and tell me if I'm wrong about this, you allowed customers to deposit and hold USDC instead of what it looked like was that you auto-converted them into your own exchange dollar. Am I wrong?
There's a minor correction. So number one is we do the auto conversion into BUSD, which is not issued by us, which is not the exchange dollar. It's actually issued by a New York DYF licensed entity, Paxos. So the reserves are in New York. It's a stable coin. The problem we had before is we have many different types of stable coins on Binance. And Bitcoin trades against USDC, Bitcoin trades against BUSD and the USDT. There's TUSD, there's a bunch of other things. And then it's very difficult for users to find the best price. So we said, okay, they're all stable coins and they should convert 1 to 1. So let's combine all of them into one so that the users just they want to buy Bitcoin, they go to Bitcoin BUSD and they find it. On the deposit and withdrawal, we do the conversion. We have channels to convert them 1 to 1. But the channels we have actually have to go through a bank because to convert from BUSD to USDC, we have to sell BUSD into US dollars, cash in a bank, move it to a different bank account, and then buy USDC at a different institution. So that day, we had more users trying to buy or trying to deposit BUSD and withdrawing USDC. And we ran out of that. And the bank that does the conversion doesn't open until 6 hours later. And that's a bank in New York. So we were actually blocked. This issue was actually caused by a bank. So that's what, and stable coins is the only one we convert. Every other asset, people deposit Bitcoin, we hold Bitcoin. People deposit Ethereum, we hold Ethereum.
Right. And you understand.
Okay, did that make sense? So actually, let me just try a second. Okay, so what is a stable coin? A stable coin, in theory, there are all these different stable coin companies and providers. Most of them are actually in New York, so he's not wrong. It's a little bit funky what he's trying to say, but because the conversion concept. So converting anything, whether it be converting currency or whether it be converting what have you, there's a few different people that can do it, especially if it's going to have to come back into US dollars. So it has to be done in a particular way. Okay, let me say it that way. So what he's saying is that unlike other coins where they can just act like a ledger and do whatever they need to do, when there's a run on a very specific coin that has to, by definition of the coin, trade 1 for 1 fully collateralized by US dollar, if for some reason the run is too aggressive, then because it has to go from the coin to US dollar and then back and forth, then it's really dependent on that bank that they're working with to be running 24 hours in US dollars and be fully reserved. Now, it's a little bit funky because it's a little bit funky. So that one could definitely be tested. I'm not going to say it's 100%. I could see a bank, given the size of volume that CZ does, having a little bit of an issue. That one definitely needs to be investigated further. I also want to comment on what a fractional reserve is. In the United States, and also in other countries, the fractional reserve generally has banks holding, the minimum reserve requirement is 8%. Most banks hold more than that. SoFi is a little bit different because it just became part of the banking system in a particular way. And Morgan Stanley's kind of on the higher end right now at like 14%, what have you. If you're looking for what is the reserve, what is the bank holding in reserve, you can look up the CET capital ratios, or you can look at some of my old videos where I always go through the risk report and talk about the CET capital ratio, because that CET capital ratio has a whole mess of extra rules that tells you the nature of precisely of what's being held, how much and what percentage it is of total assets. Now, that is not what happens at what he's saying at a good organization, crypto exchange, because there's no central bank. Everything has to be held 100%. And so later he talks to how then they make money, because what a bank does is they lend out those assets and make money that way. This is not going to be allowable as a format of revenue for a crypto exchange. So let's keep going. Oh wait, David, did you notice anything in there? I feel like you're going to save all your questions for the end.
No, I mean, I think the point he's making is they cannot afford to operate like a U.S. bank. I mean,
no, or even any foreign bank. They have to operate like an old school bank from another country, right?
Yeah.
Where like
so he collateralizes it 100%.
100%, yeah. But it's still going to be interesting because the next, these questions on like what Oh, the other thing is stable coins always, they're called stable coins because they're basically coins that represent actual currency. And you need it in electronic format because everybody's in electronic format. There's no like checks that are being written. There's no any of that. It's all on crypto. So that's really what it is. And then there's a few different companies that offer a coin and reserves. Hopefully that made sense. If not, stick something in the comments and we'll try to.
What he's saying is he needed liquidity to buy or sell that stable coin. The liquidity was in New York. That's the market maker, right?
Yeah, that's exactly right.
Okay.
It wasn't that he didn't have the capital or collateral or anything. It's just the market maker wasn't open. Yeah, right. That's what it sounds like to me too. I mean, of course, everybody's going to investigate that just to make sure, since this is we're in 2022. But that actually does sound right to me. Okay.
Well, I'm asking that question because it does appear in that instance, at least, that when you said no amount of withdrawals would put you under pressure, by default, it put you under pressure. Now, whether it was you're doing or some other bank's doing. And so the question is, longer term, would you reevaluate how you do that?
So we have the assets to convert. So there's no margin, no leverage. We just needed the bank to open. So the bank opened 6 hours later, it was fine. So banks don't work for 24 hours a day. Banks only work for a few hours a day. And when banks are shut down, when banks are closed, you try to withdraw money, it doesn't work. That's exactly the same situation that happened. And we allowed people to withdraw other stable coins onto other platforms to do conversion if they want. So there was not a liquidity issue. It was just, there was a conversion issue that was going through the bank.
In terms of the credibility.
Okay, it sounds like to me it was that specific coin because everybody wanted that specific coin, but they could actually then go to USD Tether or USD something else or USD this other thing, and it would be fine.
Yeah, I'm sure that is just disclosed to people or his customers or his depositors. I'm sure it's
everybody's so skittish. I mean, I don't know. We need someone that really is in the deep dark and back office, because it's not going to be something most maybe some front office people would know, that would know if a European bank, so that he could have, it is weird that he doesn't, I wonder if a European bank can do the volume that he needs to clear across the others, or if it's because that coin forces you to go with this bank.
Yeah, I mean, he doesn't care who buys or sells it. I mean, he just wants the liquidity, and the best liquidity is where your customers get the best price.
Yeah.
I happen to be in New York, man.
I don't know. I think, but it does beg the question, because we've got the holidays coming up. You know what I mean? He's a 24-hour exchange. So this could get really interesting in the next 2 weeks. Because the banks are closed for 3 days at a time. Okay. All right. This one, I think, because of the time of year, we may have someone test this theory in the next few weeks. Oh my goodness. All right, let's keep going.
Of Binance. You disclosed that Binance holds about $60 billion of crypto assets. But thus far, you haven't disclosed your liabilities. And I wonder why that is and whether you will.
Yeah, so we are working with firms to do the audited financials, liabilities, etc. Very simply, Binance does not owe people money. Binance does not have loans from other companies, from other funds. We just don't have it. You can ask any fund in the ecosystem. You can ask any VC. We actually also do not have VC investments, so we don't owe anybody any money, and we also do not have loans to other people that we depend on for our next payroll. So we are very simple, very self-contained type of organization, and we manage our cash very simply. So that's very, very different from the FTX situation, where so people who are hurt by FTX are now worried about everybody else, and they were defending FTX before. That's why they have money on FTX. So, but just because they're bitten by one snake doesn't mean that every other animal is the same. So now we're.
Okay, sorry. Let me mute that for a second. Hey, look, I should probably get the non-commercial version. What do you think about that?
Well, he's just saying he has no debt, but I don't know why that keeps you from disclosing your financial statements.
I know. I do think it's weird. He's not, I do think he should have financial statements already available.
Yeah. I mean, trust
That
me,
was
he does
video.
by the second.
Yeah, man. You
I don't know.
know,
Maybe he's got some kind of privacy concern for his investors or something. I don't know. I don't think it's sinister. I think uh, there's no reason for him to do anything that's not upright, straightforward.
hold on. Like, I'm trying to see if the other video where he calls Kevin O'Leary a liar is available, but it looks like, let me see.
Yeah, let me throw this in. I mean,
Yeah.
crypto, they're all kind of in the same on the same team, you know. So if one goes under, it hurts the other one because it's such a small. It's not like, hey, let's put this out of business, this other company out of business, so we can gain more market share. That's not like that, because FTX going down hurt his crypto business.
100%.
Right.
So it is a little bit awkward what's going on
In
here.
fact, he tried to bail them out, but they looked at the financials, and you know, that's when he decided to dump the CTT coin, in my opinion.
Yeah, me too. Kevin O'Leary is trying to say that it was CZ forcing them out of business by
to gain the market share. No.
It doesn't even make sense given the size of like the two different players. It would be like if Raymond James would claim that, you know, Morgan Stanley was trying to push them out of the market. And no offense to Raymond James, it's a great organization. I'm here in Florida, so I got to be really, you know, sensitive to that. Plus, I do actually think they do a really good business, but why would Morgan Stanley care, with all due respect? You know what I mean? It's such a significantly larger bank. It's got, you know, really big fish to fry. You know?
Well, I mean, I think if Raymond James were in trouble and they came to Morgan Stanley and said, hey, help us out, then yeah.
Not 100%, right?
Right. But, and that's what happened with FTX. And he said, okay, let me look at the financials. And he did for like 24 hours. And he said, no.
That's a no. Yeah.
Right. We don't like in fact, we don't like what we see. And in fact, we're going to sell all of your coin because we just saw that. I don't know. To me, I don't know, that was kind of dirty pool, but you can't blame him. You know, he has to protect his assets.
I mean, totally agree with you. And I think it's kind of interesting, right? Like someone comes to you for a bailout, you look at it, you're like, no, this just has to go through bankruptcy. And by the way, I think in a different video I saw, they said that at the time when he was trying to figure out if he could help them out, you know, the investigations were announced and they were already bringing in Mr. Ray to come clear it out from, you know, the Enron case. So he was like, I think that's a no for me. Do you know what I mean? Like, it's a little, yeah.
Yeah, I think he's up and up. I really do.
So far, I mean, you know, with these crypto things, you won't know until you know. So, but so far, some of the aggressiveness with which all this is happening without having time for discovery to happen, it just seems like mudslinging to me. I mean, I don't see CZ mudslinging anyone in that video, but definitely you are seeing.
But O'Leary's trying to protect his image. I can't even believe they even talked to him, but he was a spokesman for FTX, which is a conflict of interest. But
I mean, he said it before Congress. He badmouthed Binance in front of Congress.
Yeah, that's not true. I mean, that's ignorant. I don't know what he's doing.
It was very interesting. Anyways, that's all I have for here. Was there anything you wanted to ask on Adobe, or did that all make sense, or anything else?
No, I think a Morgan Stanley analyst came out and recommended Adobe. So,
yeah. I mean, you know, I'll have to look into the nature of the recommendation. Like I said, they're a good company, but it is you know, some of this is timing as well. And this is a really tough time in the particular industries that were really driving them forward.
Right.
I think. I mean, CapEx is much higher. A lot of it is being directed towards Web3 type directives that are going to require more advanced tracking of people clicking through, which is one of the big things that they do, as well as and also greater graphics and more responsive graphics, which Adobe through its various suite of products does have that capability. But I don't know. there is a cash burn concept that does exist in R&D. And, it's a license revenue sort of situation. So if a lot of headcount has been dismissed, that's a lot of corporations not paying for those licenses. I don't know. It's just, I think the timing is really weird for me.
Yeah, got it. Yeah, and the market's just, the market's nosediving, which is a little bit, I don't know, it seems to be overblown to me. This whole inflation thing, inflation's gone, and inflation causes the dollar to, the tighten rates, the dollar goes up. Now the dollar's coming back down. The effect of high inflation on earnings has already happened, I think. I don't know, but that's what it looks to me like long term. Can't fight the tape short term, but
I know fighting the tape is the mystery of this whole thing.
I think he's doing a little bit too much. He's a little bit too hawkish.
As much as I'm a huge fan, and I'm probably the biggest fan of this man,
right?
Because it used to be 25 basis points, so we're still at 50 basis points on our increase. Maybe you could take your foot off the gas a little bit better. This is like someone who was driving at 90 and is now just driving at 85. We're still actually over the speed limit of the school zone. You know what I'm saying? If we could just take it down a little bit further.
Yeah, but oil is cheaper, lumber's cheaper, copper's cheaper.
Yeah, I think we got to slow down these rate increases. And it's not just because I love being a bull versus a bear. It is actually, you're right. He's got to be right on the line right here. Take demand down for sure, but I think we're going to see in these releases that come out next week, probably a nosedive in consumer confidence, and the PCE should show what CPI showed, given that retail sales was so weak on top of it.
Okay. Well, what I'm saying about oil, lumber, copper, blah, 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 they're worried about wage inflation, right?
Yeah.
So, is really, so you don't want people to make a little bit, your wages need to stay above the CPI, right?
Yes.
So
this is all true.
You would want higher wages.
Yeah. Only about 1% of the economy is on minimum wage, from what I understand, 1 to 3. Sometimes they'll say as high as 3, because it's hard to get precise estimates across the US. And then there's a demographic spread associated with that. But wage increases, raw material cost increases due to wage increases trickle through the economy in a particularly painful way. I really think that a lot of this just has to do with they probably because there's raising interest rates, and then there is the economy slow enough right this minute to support the pickup. How does this all work at the same time? They're kind of two different things. Do I think that the machinations of what he's already done are adequate? I think they might be. So raising it further is a little egregious at this point.
Right.
I think that's what you're saying too.
The dollar's telling you that. The bond market's telling you that.
Yeah.
So, I don't know.
I'd like to see him cool it faster. Do you know what I'm saying? I've been with him this entire time, and I worry that part of the reason he's not doing it is because we really don't actually know how Europe is going to get through the winter yet, until the winter months really come in, and then we really see what raw materials everybody actually has. But I think he's done enough. God, we'll see. I don't know.
They can replenish their oil reserves now. It's 60 or whatever it is. So.
Oh yeah, everybody needs to replenish their oil reserves right now if they can. Quite frankly, because from what I understand, though, Europe is having not shortages, but they're doing some. They're already. I don't know.
Well, Europe is subsidized. They put price caps, like Germany puts price caps on utilities. So it might cost the government money, but I don't know. It's very confusing.
Yeah, I'm with you though. I more or less agree with you. Actually, I totally agree with you. Why would I say it that way? I totally agree with you on this topic.
Well, you're more an expert on wage inflation, which that totally.
I don't know about that, but yeah.
I'm for wage inflation. I like wage inflation because they're buying things. They're supporting your economy.
I like wage inflation. It's but wage inflation due to so if you have decline, if you have companies that are making money, then wage inflation is fine. But if you have companies that are hurting, then wage inflation. And it's like I'm pretty like I agree that we should. You know, we used to space out these rate increases a little bit too. You know what I mean? So it's not like he should feel the need that he has to raise it at all times. You know?
That's a great idea. Yeah, all of a sudden he decides to raise some 5% in a year. Come on, do it in 1% over 5 years.
Yeah. You know, there's a lot of different things he could do that I would have preferred. He could have said, you know what, we're going to consider 25 or 50 basis points, but I'm sure he's thinking market uncertainty, la, la, la. But still, that's a legit way that he could do it. Or we'll do most likely 25. I don't know. But it doesn't take the volatility. I mean, it doesn't take the bears out of the market. The volatility, because we've just been going straight down, I think is just a mathematical weirdness, you know?
Yeah, it's more lack of buyers than sellers, I think.
Yeah.
Okay.
All right. See
Great
you guys
show,
on Monday. Have a great weekend.